Hello and welcome to the Business Standard Banking Show. Anup Bagchi took over as the MD and CEO of ICICI Prudential Life Insurance Company in June. ICICI Prudential Life Insurance Company is one of the largest company in the private sector. We have Mr. Bagchi with us today. He will talk about his priorities and strategies. Mr. Bagchi, welcome to the show.
Yeah, thank you, Manojit.
The biggest question which is there in everybody's mind is that would you like to turn the focus on growth back on ICICI Prudential Life Insurance?
No, yes, absolutely, Manojit. I think Kannan had done a great job. He has left a great foundation by diversifying the products, by diversifying the channels. And now the focus certainly is the absolute VNB growth with a slant with contribution of growth. So margin, of course, is there. So, but growth is really where the focus would be. And to drive growth through penetration in different customer segments, through a wider proposition, through diversified channels, because now, as you know, we have the best set of diversified products, propositions, and best set of diversified channels. We have 40 plus, around 40 banking partners. We have 400 plus non-banking partners. So we really have a width of channels and width of proposition and a very wide variety of underlying clients whom we can serve. So certainly, as you rightly said, that is certainly a focus area.
So what kind of business premium growth, if I can ask, you are looking for the current financial year, also on the medium term, say in 3 years' time from now?
So Manojit, we don't give projections or we don't give guidance on growth. But if you were to see the numbers that has happened in the last quarter, you will see that month over month we are improving. June was much better than May. May was much better than April. So month over month we'll keep striving to really grow. Just to give a perspective on growth, when we look at our own data and when we look at the general industry data also, within our own channels, there are underlying customers who are there with the channels. So if you have a non-banking partner, they will have their own customers. You have bank, they have their own customers. You have agency who have their own customers. And at all levels, by whatever cut you see, the penetration levels are not more than 1.5%. In fact, in most channels, it is 0.7 to 1%, then 1.5 up to 1. And as you know, it is it's not 1% who would be needing insurance type of products, because it's insurance, life insurance industry essentially solves 4 big societal problems, and it addresses these issues. One is life protection, which no other sector does. Then you have longevity planning, old age finances through annuity and other retirement products. Third is reinvestment risk. There is no product in the market, apart from life insurance, which gives you 25 years guaranteed return.
Correct.
And back we hedge it. And then you have health. Health, of course, you have other general insurance companies and standalone health companies who give their own version of health product. So essentially, these are 4 very most important pressing societal issues in finance. And so the penetration should not have been over 0.7 to 1%. But slowly, at least I feel that the society is also shifting and the need for protection is increasing.
Started with the point of penetration, which means there's a huge opportunity for growth.
Absolutely.
So I mean, ICICI Prudential Life is currently at 3rd position among the private sector life insurance companies. Is there an aspiration to become the number 1 over the next few years?
No, the aspiration will be that, to keep growing. And if through growth and serving the customers, if we become number 1, we'll be very happy and very proud.
The flip side of the growth is that the VNB margins, which has dropped 100 basis point to 30% in the first quarter. Do you see some corrections on the margins front as the company is more focused on volume growth? And what is the comfortable level of margins that you want to settle at?
No. Great question, Manojit. So if you were to see as to what are the drivers of margin, the drivers of margin essentially is a product mix.
Right.
Product mix is really the driver of margin. Just in banking, if you have unsecured, you will have a higher margin. If you have mortgage, you have a lower margin, and depending on the product mix, you will have the yield on assets, and then basis your liabilities, then you have NIMs. It is not very different here. It's not very different here, because I'm just giving you the analogy of banking because that is more understood than insurance. That is why I'm
Yes, yes.
analogy of banking. Now
Yeah.
from here, the fixation. So why did the first answer, why did the margins come down a tad? It came down a 1%. Essentially because 5 lakh and above product went away. And so guaranteed product went away. Guaranteed product is slightly higher margin than ULIP and other places. And so obviously the product mix changed a little bit and the margins a little bit came down. Now the issue is that should companies like us get fixated on margin? The answer is that we should not get fixated on margins, because margin is also an outcome of product mix. What we should get fixated on? We should get fixated on the fact that are we serving different kinds of customer. And so for us, really it is about ULIP, protection, annuity products, long-term guaranteed products, and semi-guaranteed products, which are called the participating products.
Right.
So really, but when you look at the underlying, the customer segments that resonate with these products are very different. An annuity customer is not a protection customer.
Right.
Okay, and so, but we need to serve the annuity customer. We need to also serve the protection customer. We also need to serve the ULIP customer.
Right.
And so, if we get growth, if we have diversified enough on the customer segment and the product mix, margins will also come.
Right.
And that will be the approach, Manojit, is to also be, of course, mindful of the margin. Okay, but mindful of the margin through being mindful of the customer segments.
But the impact of this withdrawal of the high value products, do you see some more correction in the margins?
Yeah, no. So I think what we had earlier when the announcement came, we had come out and we had also given a noting to the exchanges that our impact is between 6 to 7%. Our impact was between 6 to 7%. Yes, there will be some impact this year, but over a period of time, it all evens.
Yeah, of course.
Remember,
Of
Manoj,
course.
long time back, there used to be 80C.
Yes,
Now
yes.
nobody talks about 80C in insurance.
Right.
That's why, 60% of the sales once upon a time used to happen only in the last quarter.
Yes,
Of that 80% would happen in the last month, but all that is all gone.
I understand.
Because now customers also don't have really that much of a choice. There are no equivalent products of long-term guaranteed products.
Correct. No, of
And
course.
so, they also adjust themselves. And what we have seen early signs that this greater than 5 lakhs is migrating a bit into ULIP, migrating a bit into a little bit into annuity, but large part of it also into the non-participating. The other way in which it is manifesting itself is that if, let's say, Manojit, you are taking a 6 lakh policy, you have 2 kids, they are saying that, okay, let me put 3 lakhs. So in a way, it is also manifesting itself and adjusting and readjusting itself in interesting ways. So I don't think it will evaporate into any other asset class, because we also compete with other savings and investment vehicles like banks and mutual funds and PPF and NPS and all of it. I don't think it's going to move away to other things, because there are no equivalent long-term guaranteed products. And now the taxation on mutual funds have also gone up. It is going to remain here only. Now, how will it get shifted into different kind of products? We'll have to see.
Now, since you mentioned about products, coming to your first quarter results, retail production has really done well in this quarter.
Yes.
What was the key drivers for this kind of growth?
No, Manoj, a very interesting question you have raised. If you look at retail protection, we were at 62. There were others who were at 40, 45, and then there were others who were at 20s. So the gap is very wide. So there is a dispersion in the growth. There is a large dispersion in the growth, which is not seen in any other product. All other products, if you see, they are largely clustered around similar growth. But here there is a large dispersion. And I would say that three things I will say really drove our strategy. One is, like I said, our focus is on customers, because we went to our database. So there are 4 things that we are doing. We are doing very deep data analytics to understand our customers. We are also coming out with very diversified propositions which resonate with that customer base. We are using a lot of digitalization to ensure that the onboarding and underwriting is as smooth as possible. So if there is a demand and it comes to us, they get a great experience. And 4th is depth in partnership.
Correct.
And so when we went back and we said, because we also have a 20-year history as to what is the profile of customers who are taking protection products, with which partners are they sitting with.
Correct.
And so let us create capability within those partners. Let us refresh the capability development. Let us do deeper data analytics to see from an underwriting perspective, what can we do? And from a partner perspective, digitalization, so that the onboarding is very smooth. There is digital KYC, they get a very good experience, and diversified proposition within the protection, so that we are able to basically have different cuts of underwriting, where you can be pre-approved. So just like you have pre-approved personal loans, we have also pre-approved savings sum assured. So for a certain set of customers, we have pre-underwritten them and they come under pre-approved sum assured. On certain other customers, we have full medical. With certain other customers, we have telemedical. So we also have used a lot of data analytics to really power that. And we are also, I must add that we are also seeing some bit of a societal shift also towards protection, because protection is not a very expensive product. It is many people think it's a very expensive product, but on 25,000 rupees, generally a healthy 35-year-old gets a 1 crore cover. That is 400 times. So 1 crore divided by 25,000 is 400. It's 400 times benefit you get.
But group protection policies, are they facing headwinds due to increased pricing post the COVID period?
No, so post the COVID period, it had increased. Now it is again normalizing. It is normalizing. So there is no headwind in group term. But what is happening in group term is that when we look at, because we have a very, very large sort of play in group term also. Now what we are seeing is that actual life, the cover that you get is not very large in group term.
Okay.
It's not very large. And so what is happening is that the general advice is that, first of all, group term will only be there till you are there in a job. If you are not in the job, you will not get group term. So it is absolutely advisable that each one of us, I have taken myself also. So I must disclose, I have myself taken. We must all have group protection, which is independent of our jobs.
Now coming to the distribution part, the final few questions. Now ICICI Bank, your parent, has more than 6,000 branches, which is quite huge. So how do you plan to leverage the ICICI Bank's distribution network?
So ICICI Bank, as you know, see, they have two roles. One is as a shareholder, and second one is as a distributor. I must say that both ICICI Bank and Prudential, both of them are very, very fine shareholders. They are very, very supportive of what we do, and they are very nice. As a shareholder, they are very nice. Now, as a distributor, which is a different hat, ICICI Bank, as you know, generally they focus on the core banking products. And that is what they do. So, and on the insurance side, they have said that they will be, supportive of protection, and they'll be supportive of annuity. And that is what they do. And today they contribute around 15% to our top line.
On that note, sir, it was a pleasure as usual speaking to us. Thank you so much for speaking to Business Standard.
No, thank you. Thank you so very much. And what a pleasure again speaking to you, Manojit.
Thank you, sir.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.